good evening to all the attendees. Today, I'm going to take you through a journey of De-SPAC on the SGX. Right? We will focus on the life cycle of this De-SPAC, of the SPAC. We will briefly touch upon the IPO of the SPAC, but I think most of the time we'll spend focusing on the events and the decisions which are involved at the time of the De-SPAC leg of the whole transaction. At the end, I will also highlight some crucial information that shareholders need to focus on as you evaluate your decisions regarding the De-SPAC which come in the market. Now, before I start, I also wanted to remind again that this is an explainer session. So during these sessions, we'll talk about the concepts, but we will not speak on any particular transaction in the market, right? Please bear that in mind as you post your questions later. I will be unable to comment on the specifics of any of the transactions, right? So with that out, maybe we start. The first thing I wanted to start with is, just to introduce the SPACs. So I think to begin with, how does a SPAC work, right? I think most of you will be familiar with the IPO process. So SPAC, to look at the SPAC is just another way, an alternative mean of helping companies go public. So when you look at an IPO, which you're more familiar with, you have an operating company, and that operating company is seeking fundraising. And once that fundraising is complete, that operating company gets listed. So that's an IPO. But when you look at a SPAC, you just reverse the order of the steps. So what happens is that you raise funds first, and you put it in an escrow account. So that's the first step, and then you list that SPAC. That is called the IPO of the SPAC, right? And then once you have raised that capital, within 24 months, you have to go and find an operating company. Once you find that operating company, you combine with that operating company, you change the name to that operating company, and then you become a listed company. So in this process, you achieve the same outcome as you would have achieved through an IPO. It's just that the steps are different. Now, the second part of the steps, which is combining for a SPAC to combine with a target company, that is what we call a De-SPAC. So the SPAC is the IPO, and De-SPAC is the process of finding the operating company and combining with it. The end result is the same, which is that you get to a company which will be listed on the stock exchange, right? Now, let me begin with the life cycle or the journey of an IPO, right? So in the IPO, you have a SPAC, and the SPAC is looking to sell units to investors. Now, as an investor in the SPAC, you get units which contain a share and a fraction of a warrants. Now, at the time of the IPO, these are bundled together, sold as one packet, but 45 days after the listing, it splits. And now these shares and warrants, you can see they're trading on two different counters, on their own counters on the stock exchange. For Singapore SPACs, each unit of a SPAC is the price of that is $5 per share. So currently there are 3 SPACs listed on SGX. All 3 of them have the units were offered at $5 per share in the IPO. Now the money that the SPAC raises from the investors is kept in an escrow account. Now this is an important concept because it actually provides a safeguard. It provides a safeguard to investors that these funds are actually locked up, they're kept in an escrow, and they can only be used for the purpose of a business combination, right? So if you look at it from a perspective of a SPAC investor, what are the economics? I invest $5 in the shares. I get the warrants, which can give me the upside if the company does very well after the De-SPAC. My capital is protected because it's kept in the escrow. And if this thing doesn't work out, I have the option to seek a redemption. And when I seek the redemption, that money in the escrow can be returned back to me. So that's from the investor side. Now, the other stakeholder in this whole process is the sponsor. So sponsor is somebody who creates the SPAC. Most of the time, these are very reputable industry players. These could be people like venture capital or private equity players, and who have a lot of experience of investing in companies as well as bringing companies to the market in the sense of bringing them for listing. So from a sponsor perspective, there are a few things that the sponsor does, right? First of all, is of course it creates the SPAC. Under SGX rules, the sponsor is required to also put some skin in the game And they do that by investing in the units in the SPAC. So they put some investment, and for that they get the sponsor IPO units. So that's number one in this diagram. Second thing is that the sponsor also contributes some risk capital. Now this risk capital actually is used to pay off the expenses of the SPAC. So the SPAC, just now I told you that all the money which comes from the public investors, the SPAC investors, that's kept in the escrow. So that is not used to cover the running and the transaction expenses of the SPAC. The operating expenses of the SPACs are actually covered by the funds which come from the sponsor, which is this at-risk capital, number 2 in this chart, and it's kept outside the escrow. Right? So the sponsor bears that risk of the day-to-day expenses. If the SPAC were to fail or didn't go through, the monies in the escrow will be safe, but this at-risk capital will be used up. So that's the risk the sponsor is taking. And for the risk that they're taking, the reward comes in the form of a promote. These promotes are the shares that they get as an incentive for successfully delivering on the De-SPAC. So at the end of the process, if they are successful in the De-SPAC, they get 20% of the shares issued in the SPAC, and that's the typical promote. Now, between these two stakeholders on two sides of this SPAC, the SPAC investors always rank first. So in an event of a liquidation, the priority will always go to the SPAC investors, and the concept is that the capital needs to be in the escrow account, and they will have the first recourse in the event of a liquidation. Okay, so put that aside. That was the IPO part. The second part of this life cycle, actually what is more important now is the De-SPAC part. So now we already have a SPAC which is listed, and now once the SPAC is listed, the funds are in escrow. Your manager has 24 months to look for us and search for a target. Once it finds a suitable target, a target is found, it will bring it to the consideration of unit holders or shareholders in an EGM. So this is the first safeguard in the process, that any transaction which goes through has to be approved by the shareholders. Now, there are two outcomes which can happen in the EGM. Either the deal gets approved or it doesn't get approved. If it gets approved, then the shareholders have another option, which is the redemption option. So this again is a choice available to the shareholders. There are two options. Either the shareholder can choose to redeem, which means in that case, what will happen is that they will get returned their capital plus the interest, less of any expenses, right? Or they can choose not to redeem and stay vested. In that case, they will become a shareholder in the combined entity. They will continue to hold their shares and warrants in the successor company, which will be the combined entity. So this is the part where the transaction goes through. Now, if the manager, okay, this SPAC, like I say, they have a deadline. The deadline is 24 months. If they are unable to find a company within those 24 months, they can either seek an extension, or if they're unable to get an extension or they're unable to find a suitable target within that period, then the manager has to wind up, liquidate the whole SPAC, return the capital, which is again the initial investment that the investors make, plus any interest which would have accrued, and less of any expenses. They have to return it back to the shareholders. So I think if you look at this process, you see those little icons all over the slide. Those little icons actually highlight the various safeguards and the checkpoints that have been instituted in this SPAC or a De-SPAC workflow. These are all for investor protection. Any company that goes through this whole process has to make sure that it gets the shareholders' approval. Also, it actually makes sure that even in spite of after the shareholder approval, the shareholders still have that option to be able to actually redeem their shares. And if all else fails, there is always this option to wind up the SPAC and return the capital. Okay. All right. So that's the process. I wanted to actually take you through a simple illustration of what the SPAC shareholding looks like at the end of the process. Now, this is important because we come across a very common misconception, which is that the SPAC is going to take over a company, right? And many people ask that, oh, these SPACs hold only 150 million or 200 million, and then is that the size of the company that the SPAC will buy, right? So I think through this illustration, I wanted to explain that it is actually not a takeover, it is a combination. SPAC together with the target company will emerge as a bigger group. Here in this illustration, I've put some numbers, so let me just walk you through. For this, I imagined a SPAC which had, say, 200 million or $200 in the escrow account at the time of the IPO. Now, there is always this redemption process. So all this redemption option creates a bit of an uncertainty, right? So in this, I assume that there will be 75 million of redemptions. From out of this 200 million, 75 million gets redeemed. So you are actually left with 125 million at the time of the de-SPAC. Now, because of this uncertainty, because of the redemption process, what many SPACs do is that they also do another fundraising at the time of the de-SPAC. That fundraising is called a pipe round, right? So in a pipe round, they go out to new investors and they raise additional capital. For this example, I've assumed that the pipe round is 25 million. So in total, just to recap, for the SPAC, you had 200 million at the time of the escrow. At the time of the IPO, this money was kept in the escrow. Out of the 200 million, 75 million was redeemed by shareholders, and 25 million was added in through the new pipe investors who came in the process, right? So at the end of this, non-redeeming shareholders plus the pipe investors, you have 150 million. This is the cash you bring to the target company. I assume the target company's equity value is 600 in this case, just to demonstrate what the shareholding mix will look like, right? So at the end of this whole combination, you will have an enlarged company. The enlarged company's equity value will be 750 million. So that includes the 150 which came from the SPAC, plus the 600 which was the value of the pre-money value of the company. This 150 will become the cash which will be available to this combined entity. If you look at the shareholding mix, the target shareholders are not selling out, they're just getting diluted in this process as new shareholders from the SPAC, the pipe investors, and the sponsor through their promote become shareholder in this enlarged entity. Okay, so with that, maybe we move on to from the perspective of the shareholders. What are your choices in this whole process? So the first choice you have, and which is the default choice, is that you can, of course, the shares and warrants are trading in the secondary market. So you always have that option to trade those shares or warrants in the market, right? But if you look at the two other key work streams or two other key choices you have, the first choice is the choice on the voting. So you in the EGM, you will be asked for a vote, and your first choice you can have is that you can vote in favor of the proposed business combination. Now this vote is important because the criteria for the vote is majority approval, which means that if more than 50% of the shareholders vote in favor of the transaction, this transaction goes through. That means that all of the redemption requests which are received will be processed, and the company will proceed with the combination with the target. So that's the first option. Second option. The third option is that you can vote against the business combination. Now, if you do that, I just want to remind that you also have to be mindful that again, if the majority rejects the transaction, what that means is that the current proposal, which has been put forth by the management, will be rejected. They will not proceed with the business combination. All redemption requests which were received will also be cancelled. And from a management's perspective, their options then are that they go back and continue to look for other targets, or they can activate the winding up procedures. Particularly, I think at this point of time, for the SPACs which are listed on SGX, they were all three of them were listed in the January of 2022. So they are actually coming to the close to their deadline. So I think once their proposal come out in the market, there wouldn't be enough window to actually go and look for other targets. Right? So that's something to consider. Now these are the voting choices. Independent from the voting choices, the shareholders also have the redemption choice, which I explained earlier. For the redemption choice, any shareholder has the right to redeem This is irrespective of how he voted in the EGM, right? So he may have a different voting choice. He may vote for the transaction or against the transaction, and he may still choose to redeem. Now, redemptions, as I explained, is based on the funds available in the escrow, and this will typically involve your initial investment that the shareholders made in the IPO, plus any interest, but less of any transaction expenses. The last option is actually to take no action, right? Which means that you don't redeem. You, of course, exercise your choice to vote, which is what we will encourage. But you take no action, then you continue as a shareholder in the large entity, and then you continue to be a shareholder. Plus, you have the potential to enjoy the upside from the warrants if these shares trade above the exercise price. Now, coming back to the warrants, I mentioned that at the time of the IPO, you get these warrants. These are considered to be free warrants because you pay for the share, which is $5 a share, and you get these warrants for free. Now, these warrants have an exercise price, which is typically $5.75. So at any point of time, if the share price crosses $5.75, that warrant becomes very valuable because you can exercise the warrant at $5.75, and then if the market price is more than that, then you are in the money. Okay, now let me talk a little bit about the indicative timeline and some of the key milestones. So there are a lot of work streams which go in the background for the De-SPAC process. On this page, what I've done is that I've highlighted those in black for those which are more relevant to the shareholders and the retail investors who are the audience on the call today. So I think for the public milestones, the first milestone where the deal becomes public is actually the announcement, right? So if you look at the announcement, that's where your deal will become public. A lot of information will be available in these announcements, but I would urge the unit holders and shareholders to actually wait for the dispatch of the circular, which comes out at the time of the EGM notice. That is the second milestone, which happens later in the process. Do wait out for this because the circular is actually quite comprehensive, and it will contain a lot more information, which will be very pertinent for you as you evaluate on your choices and decisions about the De-SPAC, right? So announcement first, followed by the dispatch of the circular. After the circular is dispatched, that's when your EGM notice starts. That's also the same time when your redemption window opens. So for those shareholders who opt to choose for the redemption, that's the time to submit these forms. These forms will be provided together with the circular dispatch. Now, this redemption window will remain open from the point of the dispatch all the way up to 2 or 3 days before the EGM. So do bear that in mind. The redemption window closes before the EGM. That is important because the statistics for this redemption, which will be compiled by the SPAC management, and these statistics will be displayed or disclosed to all the shareholders during the actual EGM, which happens. Right now, if that EGM goes through and the shareholders receive, and the SPAC management receives the majority approval from the shareholders, they will proceed with the transaction. Now, proceed means that there are certain steps required to complete. These steps are related to the completion. They're also related to the process of redemption and the process of crediting of new shares to your target shareholders, also to the PIPE investors. So while all these processes are going, there is a period of transition. And during this transition, we feel it's very likely that this stock will be suspended. So that's another something which is important for shareholders to take note of, that during this period between or slightly just before, few days before the EGM, leading up to the completion, is highly likely that the shares will not be trading. So if you just be mindful of that, if you were looking to trade or sell out, there are these trading restrictions during that period leading up to the EGM. And at the end of this period, once you have met all the conditions and you have completed the transaction, then you change the name. You become that target company. You change the name to the target company. You also process all the redemption payments to those shareholders who had chosen to redeem. You credit new shares to the target shareholders, also to the PIPE investors, and then you commence trading under a new name and an enlarged entity under the new name. So that's broadly the timeline. Okay, the last part I wanted to quickly touch upon what are some of the information which is crucial for you to evaluate this transaction. These information, most of it you will find in the circular. So please pay careful attention to this information. So the first and the most important part is all about the target, right? So I think that when the SPACs came out, the real reason or the value proposition was really that they will be able to find very interesting target businesses. The 3 SPACs which are listed on SGX, all of them have a technology focus. So I think the market and the investors were hopeful that they'll bring interesting companies to list through this process. So when you look at the De-SPAC, focus on the target's business, focus on what kind of business is it and what kind of sector and industry it represents. There will be quite comprehensive information on the company and the business in the circular. You should focus on the scalability of the business to assess if this business is really scalable. There will also be sections, quite detailed ones, on the strength and strategies of the business. Now, these are sections where there will be a lot of useful information on the competitive advantages of this company. And there will also be insights on the management strategies, how they look at this company going forward, right? And the last and another important section is the risk factors. Now, this is for you to actually to evaluate and be aware of the risk associated with investment in this company. So this is the more qualitative part, description about the target group. Now, the second section is on the financials. So there will be 3-year historical financial statements available on the target company. You should focus on that. There is a possibility that there may be financial projections, but this is not a must, right? In the US, when we look at the SPACs in the US, we see that many of them in the past used to present financial projections, but I think there's for the SPACs which are listed in Singapore, there is higher scrutiny in terms of the disclosures they make. So many of these SPACs will be careful in what kind of projections they present. If they present it, it's very useful. But otherwise, I think what we can be sure of, there will certainly be historical financial statements, and that too for the full 3 years, which will be available for the use of review of the shareholders. When you look at these financial statements, I think beyond their trends and their growth, you should also focus on the profitability. Now, many of these companies represent companies from the technology sector or new economy sector. Some of these companies, it is possible that they may not be profitable, which is also very common for these fast-growing new economy kind of companies. So in that case, I think you should focus on, if they're not profitable at the net income level, are they profitable on the EBITDA level? Or if not, at least there should be a path to profitability, which means that the business model should be sustainable and should eventually lead to profitability, if not now, in due course. And the last thing that you should focus is on the financial position. So here we're talking about the balance sheet, as well as the cash flow position of these companies should be strong. So this item number 1, which is the target business information and the target financials, is something that you can find on the circular. The last section is on third-party reports, and this is something which may be a part of the circular, but could be an attachment which may come about the same time or near the same time when this circular is released or dispatched. Right. The first thing is the independent market report, or what we call the IMR report. So this report is by a third-party consultant. Typically, these reports will contain commentary on the market, the industry, and the competitive landscape. So again, very valuable inputs for the shareholders because for them to understand the industry dynamics. The second report is actually a valuation report. Now again, this is optional. As per the SGX rules, if a SPAC has done a PIPE investment, it has got PIPE investments in the process, it's not required by regulations to do valuation report. So this is something which is optional, or it is mandatory for those SPACs which do not have a PIPE round. Now, if there is a valuation report, of course, shareholders can benefit from it. I think what they should look for is that the valuation benchmarks and the methodologies used, and they should compare the purchase price against these valuation benchmark to see that this purchase price is actually reasonable, depending on the business, the potential of the business, and depending on the comparables and the benchmarks which are available. Lastly, I think lastly, we want to talk about the research reports. Now, these research reports are produced by third-party research analysts. So this is something which is, I would say that SGX and SIAS are very focused on, and they're involved in this this market education exercise. And in that endeavor, they would have reached out to certain research firms to avail certain research commentaries, which will be released and made available to public investors. So as and when these research reports are available, do look out for them as well, because again, they provide an independent view of the whole transaction. So actually, these are, I would say, the information that you can get from the circular and from the third-party reports. Somewhat more intuitive, but the last part I want to touch upon, and this is really the last slide for my presentation today, is on some of the information which may be hidden or maybe scattered along the different announcements and the circular, but you should pay attention to it. First thing is on the investor commitments, right? So for you as an investor, it's important to know who are the other shareholders in the process. I talked about the redemption and that the uncertainty that redemption creates, because from a shareholder's perspective, whilst you have the right to redeem, from the SPAC perspective, they would not know what is eventually the capital or what is eventually the cash that they will transfer over to the target company, because this depends on the choices that the shareholders will make. Right? So given that uncertainty of redemption, it's always good to know that are there any significant shareholders or sponsors who have given a commitment not to redeem, right? So that gives you that assurance that there will be this minimum funds available in the escrow account, which will roll over to the target at the time of the de-SPAC, right? So that's on the redemption part. Now, some of these you should also focus on the commitments in terms of the PIPE. You should look at the profile of the investors who participate in the PIPE, as well as if there were any forward purchase agreements promised or made at the time of the IPO. Now, these forward purchase agreements are kind of agreements which are signed by the sponsors or promoter-related entities, and they commit to come in with another top up of their investment at the time of the SPAC, right? So look out for these. Again, these gives you assurance that whatever is in the PIPE or whatever is in the forward purchase agreement, this again will roll over to the target when that de-SPAC completes. The last thing to look for is that are there any moratorium arrangements, right? So moratorium means these are lockups. So moratorium means that these investors or these stakeholders have committed that they will not trade their units for a certain period of time. This could be 6 months, this could be 12 months. Normally, we see that the parties which provide these kind of moratoriums could be the sponsor, it could be key shareholders of the target company, or it could be other shareholders or investors who are involved in the SPAC, right? Now, having these moratoriums, particularly from the key shareholders of the target company, is important. We have looked at a lot of US SPACs, and one of the reasons why some of these SPACs don't trade or didn't trade so well was also that the existing shareholders quickly exited the company the moment it was listed, right? So having these kind of lockup arrangements addresses those concerns and makes sure that there is price stability when this de-SPAC is completed. Okay, the last part is that on the sponsor alignment. Again, this is something that to look out for. There are a number of stakeholders who are involved in the SPAC process, de-SPAC process. There is the target side. There are the shareholders of the SPAC, which are existing shareholders. There are also investors who come into the PIPE. So I think a good SPAC sponsor will make sure that the incentives for all of these stakeholders are balanced, right? Now, if you look at, to start with the target side, very often we see there are certain deferred incentives. This could be in the form of earnouts, or earnout means that these earnouts will be released subject to meeting certain financial targets in the future. And these incentives are typically given to the shareholders of the target as well as management to the target. Now, these incentives serve two purposes. First one is that they incentivize the target. They incentivize the target shareholders to first thing is that they incentivize the management to focus on working on the performance and trying to achieve those financial targets. That's quite obvious. The second thing they do is that they also give incentive for the existing shareholders to hold on to their shares and not to sell, because there is they will get more incentive if they don't sell, and these targets are met and these earnouts are released. Right, so that's on the target side. For the SPAC shareholders, which could be many of you, if you stay vested, again, there could be incentives. What we commonly see that there are bonus shares or bonus warrants given to shareholders who do not redeem, right? So you can call it like a loyalty bonus. And this is only given to those who don't redeem. So those who redeem will not get these benefits. Now, these benefits actually could come in the form of additional shares or additional warrants, and in a way, they will lower your investment cost, through the provision of these incentives. Lastly, there could be incentives for investors who are participating in the PIPE round as well, and this is to compensate them for taking the risk of coming in the PIPE, right? So all in all, there is a lot of incentives for all the stakeholders, including the SPAC shareholders who stay vested and ride the upside. Last but not the least, there is always the option of the warrant, where if hopefully the SPACs bring very good companies and they continue to trade well in the market, the warrants can also deliver a lot of upside for the shareholders. Okay, so that's all I had in terms of the sharing today. My last comment to you all would be that please wait for the circular. There is a lot of information which will be useful for you to make that assessment based on this information will be disclosed in the circular. And I would encourage you all to attend the EGM when they come up, and that will be again an opportunity for you to hear from the management about their thoughts on why they selected these targets, and also an opportunity for you to ask any questions you have about the target.